Mr. Bagra, you've made an announcement recently to set up a 1 million ton alumina plant in Gujarat worth 4,200 crore. Tell us more about the project and how do you plan to fund this project?
This is a project which we have envisaged based on expression of interest invited by Government of Gujarat, where NALCO emerged the sole qualified bidder, and we have negotiated with them the agreement to set up this alumina refinery based on the bauxite which the Gujarat government's state PSU, the GMDC, will supply to us, and the site has been selected for this purpose. And as you rightly said, estimated cost of 4,200 crore rupees will be required, and then this will be funded through debt equity ratio in the range of 70 to 30 or 2:1, and that call we will take once the DPR is available to us, and then at the time of investment approval by our board, we will decide the exact ratio, whether it will be 2:1 or 70-30 of the debt equity. Debt portion will be raised from the market, and equity we will provide from the NALCO balance sheet.
Mr. Bagra, are you looking to raise debt as well?
That call we will take at that appropriate time, because we are still a bit away, because the DPR will take at least 5 to 6 months, and then the investment approval. So, and then we will go through the process of inviting tenders for the construction and for the supply of equipment. So that will be the time which will be roughly 1 year hence to decide the mode of the raising debt, whether to issue the debentures or by the bonds or through a consortium, the term loan from the banks. So that call will be taken at that particular point of time.
So how exactly do you think you will be able to source bauxite for this project?
The bauxite is available in the Kutch district of Gujarat. Presently that bauxite is being exported by the GMDC till last year to China, and for last 1 year we understand that it is coming to the east coast of India and then being supplied to NRAC in Andhra Pradesh and to Vedanta in Odisha. So that is the bauxite GMDC has committed to supply to us throughout the plant life period of 25 years. So the bauxite mining is already going on, and there are many other mines which the GMDC has not yet started operating. So over the plant life period of 25 years, GMDC will explore all these mines and then supply to us at a predetermined price.
Right. Mr. Bagra, the company has also been enjoying a good premium on aluminum over LME prices. Tell us, what is the current premium you're clocking, and do you expect to sustain these levels?
In the last tender, we received a $202 premium, which was of course the highest NALCO has ever been able to garner. And gradually there has been an increase in the premium over the aluminium price, and we have reached to the level of 202, and this $202 per ton is based on the terms of CIS of Singapore. As far as sustainability is concerned, since there is definitely a mismatch between current demand and supply, so the premium is the result. We hope that the basic LME price itself will now should rebound because of the closure of the lot of capacity of the smelting world over. So if the LME price itself recovers, then the premiums are not sustainable at the present level. And we hope that at least the LME price plus the premium both should be in the range of 2,100 to 2,200 over next 4 to 5 months.
Mr. Bagra, I'm going to split my next question into two. First, what about your existing relationship or coal supply relationship with Coal India? Are you facing any problems there? And B, for this current financial year, which is FY13, what is the kind of thermal coal quantity you are looking at importing?
For last 5 months, we are having steady supply of coal from Mahanadi coal fields, the subsidiary of Coal India, which is supplying to us. Except that there have been intermittent disturbances due to their internal logistic problems between pit head and the rail head. There are certain conveyor belts which go out of operation intermittently now almost every month. Because of that, almost once a month for about a week there is some disruption which we have to make good by transporting the same coal through Indian Railway network. But there has not been a major shortfall in supply from the Mahanadi coal field. We have already built up a stock before monsoon in the range of more than 200,000 tons, which is enough for 10 to 15 days of consumption, and we don't foresee any major problem on this issue. As far as import is concerned, we have very recently placed orders for about 3 lakh ton of thermal coal, both for our captive power plant at Angul as well as for our alumina refinery at Damanjodi.
Mr. Bagra, your aluminum segment, which nearly contributes 60% to your revenues, gave a negative EBIT margin in Q4 FY12. Can we expect any improvement in the margins in the coming quarters?
In fact, because of the pressure on the aluminium prices, though partly supplemented or partly offset by the high premiums, yet the total revenue, the base price and the premium put together is still not above the total cost. So till the prices recover, we don't foresee any major recovery from the margin side from the aluminium segment. But as we are hopeful that after the gradually more capacity is shut down in the globally, there will be pressure on the supply side, and that should help in prices to rebound. But till the prices rebound, this problem of margin from aluminium segment will continue. But I must clarify that even at this price, we are recovering full marginal cost, and there is a positive contribution towards the total cost.
Mr. Bagra, appreciate your time and thank you for joining us.